This is Capital Verse. Master money. Own time. Imagine this. You finally saved your first $1,000. Not money from your salary that disappears in bills, but money you actually managed to keep. Now a bigger question appears. What should you do with it? Leave it in the bank? Buy stocks? Try crypto? Start a business? For beginners, this decision can feel confusing because everyone online seems to have a different opinion. Some people say invest aggressively. Others say play it safe. So in this video, we're going to break down a simple, realistic strategy for investing your first $1,000. No complicated jargon, just practical steps. Step 1. Build a small safety net first. Before you invest a single dollar, there's one important rule. Make sure you have a small emergency buffer. Life is unpredictable. Unexpected medical bills, car repairs, a broken phone, or an urgent expense. If all your money is invested, you might be forced to sell your investments at the worst possible time. And that's exactly what many beginners do. They invest, an emergency happens, and suddenly they sell their investments during a market drop. That's why smart investors always keep a small emergency fund first. Even a few $100s can provide stability. Once you have that, then you can think about investing. Step 2. Understand the difference between saving and investing. Saving and investing are not the same thing. Saving protects money. Investing grows money. A savings account keeps your money safe, but it usually grows very slowly. Investing, on the other hand, allows your money to grow through businesses, markets, and assets. However, investing also involves some level of risk. The goal is not to avoid risk completely. The goal is to manage risk intelligently. Step 3. Start with simple investments. When beginners hear the word investing, they often imagine complicated strategies. Day trading, predicting stock prices, watching charts all day. But the truth is, most successful investors follow a much simpler approach. Many beginners start with index funds. An index fund tracks a large group of companies. For example, instead of trying to pick one perfect stock, you invest in hundreds of companies at once. This spreads your risk. And historically, broad market investments have grown steadily over long periods of time. For beginners, simplicity is usually a strength. Step 4. Avoid the biggest beginner mistake. One of the biggest mistakes new investors make is chasing trends. A stock goes viral online. A cryptocurrency suddenly explodes in price, and suddenly everyone feels like they're missing out. This is called FOMO, fear of missing out. But chasing hype often leads to buying at the highest price and selling when prices fall. Successful investors rarely chase excitement. Instead, they focus on consistency. They invest regularly, and they think long-term. Step 5. Understand the power of compounding. One of the most powerful forces in investing is compound growth. Compounding means your money earns returns, and those returns start earning returns too. Imagine investing regularly over many years. At first, the growth may seem slow, but over time, the effect becomes dramatic. Small investments today can grow into large assets in the future, not because of luck, but because of time. Step 6. Create a simple strategy. If you're starting with your first $1,000, a simple strategy could look like this. Invest a portion into broad market investments. Keep a small amount as cash. Continue adding to your investments over time. The key is not the exact number. The key is the habit of investing consistently. Because wealth is rarely built through one big decision. It's built through hundreds of small, disciplined decisions. Step 7. Think long-term. The biggest advantage new investors have is time. Markets go up, markets go down. Short-term movements are unpredictable. But historically, long-term investing has rewarded patience. Instead of trying to predict the next big trend, focus on building a long-term strategy. Time in the market is usually more powerful than timing the market. So, your first $1,000 may not seem life-changing, but it represents something important. The moment you stop only earning money and start making money work for you. That shift changes everything. Because once investing becomes a habit, wealth becomes possible. Subscribe to Capitalverse. Master money, own time.